Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking back in on the MJ space. I was in Mexico last weekend and didn't put out a video, but just want to start off with my opinion and comments on the action that's going on, and then I will get into the charts. But in my opinion, news is never random in its timing. It's always orchestrated to a degree on when it is put out. So the thing about this news is it's not news. There is nothing new going on here with these companies. These companies have always disclosed their U.S. holdings. It's been well known. They're in the filings. It's known to anybody investing in these companies and doing their due diligence that there are assets in the United States. And I'm referring to APH and some of these other names. So what I see happening is an attack. In my opinion, it was, anybody that knew this article and this news story was going to be coming out shorted these names. There's no doubt about that in my mind, and they are now making profit off of that. But the fact that these news rounds are catching on and catching hype and momentum, it just shows how subject the human emotion spectrum is to fear. And again, the fact that no new news has come out and we can see this kind of reaction to the market is astounding. But it'll happen time and time again. You'll see it over the years, where the market and the fear and the greed will certainly astound you. So where we stand here is, yes, it's higher risk, higher reward for the names that have U.S. assets. If the U.S. makes progress federally, it will be a significant reward to any name that has assets in the U.S. space. I do believe that is an absolute guarantee to happen. It's just going to be years down the road, in my opinion. So as far as having investments in names that are exposed to the U.S. markets, I'm not worried about that at all. I've been playing the U.S. MJ space for 7 years. FINRA, which is a regulatory agency in the U.S., has allowed medical marijuana and marijuana companies in the United States to be listed on the OTC before any states had legal recreational marijuana. So I'm not concerned about any crackdown here. As far as the crackdown in terms of making it more difficult for trade settlement in Canada, I also don't think anything's going to happen. I don't have as much experience with the Canadian market and the Canadian government and things like that, so I'm going to say that outright, but I think it would have happened by now. And of course, you have WEED is jumping on this opportunity, and perhaps they were behind, the news circulating the way that it has, but they're jumping on this opportunity to try and differentiate themselves and stand out from the crowd and say, look at these guys, they're risky, don't put your money over here, bring it this way. And, I guess that's a good business move. Some people might argue that it hurts the space overall. That might be the case, but in reality, they're just trying to, outdo the number 2 in the space and gain a competitive edge in terms of money coming in as investments. So it really all depends on your risk to reward tolerance, because what's going to happen to WEED if 2 years from now, federal marijuana becomes legal in the United States? 2 years is a little bit short of a time frame, but let's say in the next 4 years, if that were to happen, WEED is not going to see the kind of bullish reaction that APH and any other name that has exposure would. So again, it's higher risk and higher reward in this space by having that exposure, and it's also diversification. So personally, I'm okay with that because I have been following this space for 7 years, and I'm not concerned with the risk exposure to having those U.S. assets. Clearly, some people are, which is why they're selling this past week. But again, I think it is going to blow over. And you better believe that I bet the WEED CEO is, calling the exchange and doing everything they can to try and get, APH delisted or whatever it's going to be. But in my opinion, it's all going to blow over. And in this time period right now, what is it, August? So we've got, 11 months until the doors potentially open for recreation. We're going to have a lot of time to kill here. There's not a lot of news in this space. So stories like this can really catch fire and, become a talking point, because there's not much else to talk about for the next 11 months. And this is the news story for now. So WEED, let's get to the charts, has earnings coming out. And that's why we have this tight action. The good news for the bulls, well, I don't know if it's good news, but we're not running up into earnings like last time and then having the disappointment and pulling back for weeks. So it doesn't look like investors and traders have too high of expectations. We're in an equilibrium pattern. We're very tight on the daily time frame. We did close weak by the end of the week here, but we have our high, low, lower high, and the bulls are holding a higher low unless we break 874. But the reaction to earnings is either going to see a very clear bull break or a very clear bear break. A bull break will get us over 921 and have us looking at 953, and a bear break will break 874 support, and from there we're really looking down at 815. So there's a decent amount of room to the downside if it is a bearish reaction. So if you are in this space, you probably want to see WEED see a bullish reaction just because of the correlation with the sector overall, although that correlation has been breaking a little bit these past 2 weeks because WEED has held up way better than the names that do have U.S. exposure. But again, I do believe that shorts were jumping over those names knowing that this news story was going to get a little bit of attention. So we'll see how the earnings reaction goes. It will give us a clear break here. The weekly time frame, higher low and higher high pattern very much intact. If it's a bullish reaction to earnings, we're going to see a bullish MACD cross here on the weekly time frame. That'll be a great sign as well. And we will be looking for a new higher high if it is a bullish reaction. So I'm looking up at 953, and the next resistance after that, I would be looking back at 10 psychological. So that is what the bulls are hoping for. And we can see this is very healthy consolidation. It's low bear volume after increasing bull volume. Very clear higher low and higher high. Weekly chart still looking good on this recovery from the low in June for WEED. APH has been getting crushed. Well, that's a relative term, but it's been getting hit pretty hard. Increasing bear volume, a lot harder hit than WEED, obviously. So we pulled back, we hit our low off of 562, and we bounced. It was a weak bounce. We rejected on the back test of the 100-day moving average resistance along with these exponential resistances. It was a bit of a bear flag pattern, which shows a weak bounce and then continuation to the downside normally, but the bulls were able to hold on today. It was a quick flush on low volume down to that level. We bounced off of 565, so we held support by 3 pennies, and then closed up at the high of the day with a bullish reversal hammer. So where we currently stand, we have to see a higher low, which we did see, and now a higher high. The bulls have to break 610 and 611 in order to regain momentum. If we see a bear break of 562, I'm looking down at the next support, really down at 550 psychological and then down to 523. The bulls really need to hold these supports. We're bouncing off the 50-day and the 200-day moving average, but we need to see a break of 611 next week. And almost, if you're an APH bull, you're a little PO'd at the WEED CEO, but you want to see good earnings there, in my opinion, because that's going to be good for the sector. And it's a critical point where we stand on this daily chart. So I think the correlation with the sector would rather see a bullish reaction and a break of 611 to shift that momentum back in the favor of the bulls. Weekly time frame, big red candlestick giving back 2 weeks of upside for the bulls. But again, look at the volume. The bull volume is still outweighing the bear volume, and we do still have the higher low pattern intact here. Anything above 514 is going to be another higher low and keep the bulls in control. We are on the verge of a bullish MACD cross here as well, but we're going to have to see a move back over $6 in order for this bullish MACD cross to potentially see some follow through. ACB was also hit pretty hard here, looking very similar to APH. So a clear bear break, increasing bear volume, and a bounce off of 235. The high of the bounce was 256. Didn't get over exponential resistance. Now we pulled back and formed our higher low at 241, and the bulls have to break 256 to see a little higher low and a higher high. Look for a bullish MACD cross to start following through, and the weekly time frame is a lot different looking than those other two that we just looked at. Need to establish a higher low and a higher high. We're coming right off the bottom. We don't really have a clear higher low and a higher high. We did build a base of support just really by trading sideways, but we need to see the bulls with a higher low and then a break of 282 sometime before the end of the year to shift the trend and start a really clear uptrend on the weekly time frame for the bulls. EMC has been absolutely crushed. It's the weakest name that I've been watching, and not really sure why, because it's not like it has the most US exposure, but it is the easiest to move in terms of the amount of volume that it does take and the lack of bid support and really the lack of ask resistance. If a little bit of volume goes a long way in EMC. So we did break this low of 171. That was a bearish break. And we're coming back down here. This action makes me look at this gap of 154. And it almost looks like the market makers are targeting that level for a potential gap fill. So I'm watching that gap fill at 154. We do have an inside bar on the daily time frame. It's a bullish reversal candlestick. Bulls have to break 169, and then resistance is just going to be the high of every previous day here. We haven't broken the lower high pattern on the daily time frame for 8 days in a row. 8 days in a row, we've seen the same or a lower high on each candlestick. So we have to see that pattern break for the bulls, but at this point, it is a very significant pullback, and we're looking back down at the all-time low. As far as the weekly chart goes, still not a huge red flag because we do have the increasing bull volume. We have low bear volume on the 2 weeks of consolidation. We're coming off of the all-time low on this bounce. So we're not expecting any kind of trend change coming off of that low. When you're coming off of the low, you have to set a lower high and then a higher low and then a higher high. So same thing that we're looking for APH bulls and ACB bulls in the daily patterns. We're looking for that on the weekly time frame for EMC. So the bulls are looking to establish their higher low, ideally at 162, and then turn things around and eventually break 211 to give us that higher low and higher high and reverse this trend, which has been very clearly lower highs and lower lows for many months. Now we need a higher low and a higher high and a bullish MACD cross to reverse that trend for the bulls. FIRE has also been weak. And support down here, a little double low at 111. If that breaks, I'm looking down. Really, 111 has 4 bottoms here. So that's a key support. After 111 is down at 107. We're on the verge of a bearish MACD cross. So the bulls need to turn things around as well. A major resistance is 121. Weekly time frame, not much history here. Let's go back to SPRWF so we can get a broader picture of things. So we've got... Wrong button. There we go. We've got our low. We bounced. We rejected from the middle Bollinger Band, which we've done in the past. Now we have to form the higher low and higher high and see the bullish MACD cross. Same thing as EMC. We're coming off of the low. So coming off of the low, we're not anticipating to change the trend. We have to do it with a higher low and a higher high. That's the goal for the bulls. The sector needs some momentum. That's why I think the sector wants to see bullish WEED earnings reactions to give a little bit of a spark and some momentum because, again, there's a lull in activity over the next 11 months. We have earnings reports. We have some news coming out potentially in terms of, you know, maybe some progress on solidifying the date or some more details. But other than that, the sector and the space is going to be looking for things to talk about. And unfortunately, it's going to be things that, like we saw last week, again, no new news. And the fact that it is taking hold in the market is very surprising to me that it has had this significant of an impact. But then again, fear will do that. HMMJ, daily chart getting crushed. Bears in full control pulling back, but we still have a higher low. We have to hold 836. This is a good entry opportunity. This is what I call a bottom fishing play. Not necessarily right now. Want to see a bullish reversal candlestick on the daily time frame ideally. But it's clear to have a stop loss level, which is why I call it a bottom fishing play, because you look for a bullish reversal candlestick, you make your entry, and then you can put your stop loss level if 836 breaks. If you want more wiggle room, you can use 830, and if you want to use the all-time low, you use 821. So it's low risk in terms of knowing exactly where you should get out if the higher lows break, and it's high reward knowing that we pulled back significantly. At this point, we've seen 8 red days out of the last 9, and we're due for a bounce, and we could see a fairly easy 5% bounce once we do see a bullish reversal candlestick form on the daily time frame. But because we have been closing at the low of the day 4 days in a row, best to wait and be a little bit more patient and wait for some signals that the momentum has shifted. Weekly time frame. So again, we're coming off of our lows. We did have a little mini higher low and higher high there. Now we need another higher low, and then we'll look for another higher high. So that's what we've got here in the space. USMJ heats up in September and October and November, really. It's very seasonal. It has been happening for the last 7 years that I've been watching it and playing it. So I will be looking for HMMJ, which has a third U.S. exposure, to be seeing some of that bullish action. Whenever I'm checking to see what the MJ sector is doing in the U.S., the names I look at are MJNA. It's really one of the OGs, the first ones that was around. And I'll look at all of them. I'll look at, you know, CBIS. And I certainly don't like the financials of these companies. I don't like the fundamentals, but in terms of gauging the U.S. action, these are some of the names that I'll look at. So we have cyclical, and actually let's look at it really quick. So just MJNA, it's been around forever. It was the first name I ever put money into stocks in back in 2010. And let's look at what has happened in the past 8 years on the monthly time frame. So let's look back. 2010, little old me starting in the space, and we had a bull move. That was in March and April, so we're not going to look at that. But let's say 2011, We had the bottom in December, so we had a winter run from December and February. In 2012, the bulls really showed up in August, September, October. Then we had another winter run for the bulls. In 2013, we had an end-of-year run. So December and January also seeing very cyclical bounces. Here, October, we had a bullish month. In 2014 and 2015, it was October and November. And in 2016, it was really the whole year had a little bit of momentum, and it really picked up again in September, October, November. So that's because of the voting. We have votes in November in the states. And that's when, states vote on recreational and they vote on medical. And it's just when a lot of headlines come out and a lot of news coverage. And that's when all the hype joins the space. So cyclically, we can see that we have the fall seasons and the winter seasons as the time to be bullish in USMJ. So we'll see if that ends up playing out again. And I'm going to be watching for seasonal correlations with the Canadian market. Not sure if it will be the same, but certainly very curious to see if that correlation will be there. So I appreciate you watching. Hope you have a good rest of your weekend. We'll continue to check back in. Overall, the weekly charts, no big red flags at this point. Higher lows still intact. If we lose those higher lows, that will be a red flag, and I'll certainly be sounding the alarm if that is the case. I appreciate you all watching, and we'll see you soon.